Welcome back to Investing in Trading Live, sponsored by Online Trading Academy. As always, I am your host, Josh Lilquist, with my good friend, Mr. Al Conix, and he is the stock master today. And we've been discussing the different opportunities in the markets, where to park your money on the last segment, especially in a down market. We'll continue that discussion here on this segment here, how to follow the big money, which is the institutions, the banks, the Goldman Sachs of the world, the Buffetts, the JP Morgan, the Wells Fargos. They have the money and they control about 90% of the activity in the financial markets. And that's where supply and demand comes into play for us retail investors. That's where we can get in the markets safely, confidently, and minimizing risk in the financial markets. So if you want to come into one of these classes that we've had a lot of people texting into and calling into for that old 90s way, they wanted to improve their financial future, whatever that may be. And sometimes it's not necessarily monetary. It's more freedom of time I've been seeing a lot of. But simply just text the word investing to the number 210-210 for 2 seats for this class, one for you and one for a friend, or simply just call 952-814-4410. If you're one of those Googlers, just go to investwithota.com, and that's for 2 seats for this investing class. But also, make sure to pick up your jumbo pack. There's different strategies. There's some stock picks in there and how to get started if you're brand new, or if you're a seasoned investor and you're looking for more advanced strategies, come into these classes. Text investing to the number 210-210. As always, we were talking about that last segment, how to park your money in the right spot. But one of the things that we really focus on here at the Academy is people that have retirement accounts and they want to maximize that or get to where they need to be in a short duration of time because they're not too late, but they're behind. So one of the things that I know you focus on a lot, Al, is where are you at now? Where do we need to be? And then what are the assets, what's the rate of return you need to get there? But then what is the right asset or the right vehicle to get there? And I want to talk about those assets here on this segment. And you almost just threw it out there. I'll just let you run with that one.
Okay. Well, first of all, I want to change a little bit of what you just said. You said that you need to find the right rate of return to get where you need to be.
Okay.
What we prefer actually is not where you need to be, but where you want to be. What are your goals?
I stand corrected.
Okay, let's dream a little bit. Look at what would you like your life to look like in the future, your financial life, whether you're still working or whether you're retired. And then what kind of rate of return do we need to get from where you are now to where you want to be? And is that possible to get there? Well, there are different strategies that are going to be used based on what that rate of return needs to be to get you where you want to be.
They call it different strokes for different folks.
There you go. You got it. No, and also I want to just comment on the SPY for a minute. That's the ETF that mimics the S&P 500.
Mm-hmm.
The S&P 500 is actually made up of 500 different stocks, but there's about 7 stocks that have been responsible for the majority of the movement of the S&P 500.
Yes, and they call that the Magnificent Seven. I got that one.
Good for you. Well, here's the problem. That almost every retirement account out there is mimicking the S&P 500. It either has an index fund or a mutual fund that mimics the S&P 500.
Hopefully not a mutual fund, but unfortunately most of the time.
That's what a lot of, if not most of the 401ks are comprised of. But here's the problem. If you have those 7 stocks, stocks like Apple, Meta, Google, Netflix, NVIDIA, Tesla, those stocks are so highly valued now, you might even say so highly overvalued, that if we have a correction, those are the stocks that are going to get hit the hardest. The S&P 500, because of its inclusion of those stocks, could potentially take a huge dive. And that means your retirement accounts could be subject to some significant losses if that's the only thing that you have in your accounts.
So let's talk about that, because if people have those, Apple in a downtrend, down almost 13%. Since only July. Meta is down not as much, but then again, it is down from the highs about 9%. What were some other ones? Netflix.
Look, NVIDIA, Tesla. NVIDIA's had a nice run.
They've been on a nice run, but yet that one is down as well from the highs after their earnings, down about 12%. So those magnificent 7 aren't so magnificent currently.
Right. And that's the problem with having your retirement assets, especially your retirement assets, concentrated in the S&P 500.
So let's talk about those other opportunities they
Okay,
can do.
so there are opportunities other than the traditional stock market that most of our students use that you just haven't been exposed to, primarily because Wall Street doesn't want you to learn about them. They want you to think you need them to do something. And remember, when you're in retirement, you have, for most people now, most people don't have pensions anymore. Some do, obviously, but most people don't. So you've got two sources of money in retirement. One is Social Security, and the other is whatever savings you have in your retirement accounts, whether it's a 401k, 403b, IRA, Roth IRA, whatever it is. The only one of those two you have control over is your retirement savings.
Correct. So
not Social Security, which probably is going to take a hit by the 2020s or 30s. I'm sorry.
Yeah. So if somebody doesn't have enough in that savings account, why would a leveraged asset be so important?
Well, let's talk about leverage for a minute. What leverage means is that you can take a small amount of money and control something that's a multiple of that. In other words, something that's much larger than that. And just as an example, in the foreign exchange market, the Forex market, which has a leverage of 50-1, a $2,000 account could potentially control something worth $100,000.
And that brings comfort to people because if someone has, we'll say 100,000, 200,000 to use, you're not using the whole thing. You may use a small portion and then it can go further.
Exactly. And maybe you talked about diversification before. Proper diversification or asset allocation is not just having a number of different stocks that cover different components of the economy or different mutual funds. It's having assets that are not correlated to each other. It might be some stock. It might be some options positions.
So that's
it might
another
be futures
asset.
or Forex.
That's another asset.
Exactly.
I like that.
And those are all different sources of income too, by the way. We know that the people that are truly successful financially have multiple sources of income. Yeah, just ask Warren Buffett. Well,
let me call him real quick. Hold on.
Yeah, give him a call. Tell him I said hello.
I will.
But you can generate income off of stock. You can generate income off of futures, Forex, options, real estate, all of those things. Those are different assets. Some are inversely correlated. Some are correlated. Some are not correlated at all. But part of being successful is putting together a proper asset allocation. That gets back to what the rate of return is you need, which is going to determine the strategies you use, which will be part of a plan that we help you put together. And here's the other thing, Josh. Over half of the people in this country are not participating in the stock market, which is one of the reasons that we're seeing such a disparity between the wealthy and the non-wealthy. It's the people that are wealthy the majority of their wealth comes from the stock market. And what we're seeing also is that more men than women are investing in the markets. And that's a concern because there are a lot of women typically live longer than men do. So there may be a period of time there where all of a sudden they're in control of their finances. So for all of you women out there, come into these classes. We can show you how you can learn about the financial markets, learn about what you have and what you might be able to do with it. Because at some point in time, you may be the person in control of your finances.
Yeah, I like that. And it's really being able to discover that power of diversification. I mean, it's not that hard to explore those opportunities. You just have to go somewhere to find out that information. Find out what those opportunities are beyond stocks. Consider maybe even some bond strategies. There's different bond strategies out there. There's option strategies, as Al was alluding to. There's futures strategies. There's Forex strategies. So we got winter coming up, Al, and it's time to protect your wealth, even in a snowstorm. Come to OTA and find the right path for your money. Come into one of these classes by simply just texting the word investing to the number 210 for these investing classes locally here, right off 494. We have these all across the metro area, actually. Our main academy here is in Bloomington. We have a few different classrooms where we teach people these techniques, these skills, these strategies to park your money in the right spot in up markets, to park your money in the right spot in down markets. If you're behind on retirement, how to use leverage properly so your dollars go further. If you're one of those 90s people, simply just call 952-814-4410 for 2 seats for the investing class, one for you and one for a friend. 952-814-4410. Also, we have a lot of Googlers. I was watching a movie. I forget what it was called, but there was two guys in it. Oh, gosh. Wedding Crashers.
Oh, yeah,
And they were
yeah.
called Googlers. And if you're a Googler, just simply go to investwithota.com, and you can pick your own date for this investing class right here in Bloomington. Al, it's been a fun show here today. These hours go by so darn fast, and I feel like we just don't have enough time to cover everything. And I'm glad that we had a lot of people texting in for the investing class here in Bloomington. But you had some great things to talk about here today. But let's hear today's OTA tip of the week.
Okay. Well, you know what? If you have financial problems or issues, for almost everybody, they're not going away. They're not going to get better on their own. And unfortunately, too many people just learn to accept where they are and they don't try to change because it means doing something outside their comfort zone. It's those that cross that barrier and learn to look at the problem as an opportunity, and they concentrate on the solutions, not the problem. Those are the ones that experience the opportunity to fix the problem and to expand their life. It means doing something different that eventually goes from being uncomfortable to comfortable. It's when you experience what's possible outside of your comfort zone that the deepest levels of achievement and fulfillment are found.
I like that. If you're just focusing on the tree, you're missing the whole forest. Come into one of these classes and learn how to diversify that portfolio. Text the word investing to the number 210-210 or go to investwithota.com. As always, same time, same place next week. Until then, retire young, my friends.